Welcome to today's RightTraining webinar on modeling real estate what-if scenarios. We're glad you could join us today. Whether a client rents, owns, has a vacation home, or holds multiple investment properties, those real estate decisions can often sit at the center of a financial plan. I'm sure we're all aware of this. The decisions within our real estate portfolio can impact cash flow, taxes, retirement timing, and of course, long-term flexibility. So we want to make sure we have a clear, well-modeled view of a client's property portfolio and really emphasize the importance of that. So in today's session, we're going to walk through some scenarios designed to help you confidently model and compare common real estate decisions that clients face. We're also going to go over the data entry of putting properties into RightCapital, just so we're all aware of, how to get the most accurate information in the system. Without accurate entry, we can't have accurate modeling. So this is going to be a nice comprehensive webinar that covers, all things real estate within the system here. We're going to talk about selling and renting, relocating. We'll also look at considerations like refinancing and 1031 exchanges. So we're going to go through all of that today. And the goal of the webinar is to give you a practical framework that you can apply directly to your client conversations. That being said, just a quick couple of housekeeping notes. This webinar is being recorded. We record all the webinars. If you are interested in watching the webinar back, you will get a copy sent to your inbox. You will also be able to access the webinar recording from our Help Center, and I will touch on how to access the Help Center and our wonderful support team a little bit later on today. On top of this, we also always have time for Q&A at the end. So if anybody has any questions, I will make time until the top of the hour to answer any questions anybody has. So feel free to throw them into the Q&A box down below, and I will again address anything that needs to be addressed. That being said, let's dive into this real estate conversation. And before we even do anything within the system, I just want to touch on a really small setting that can have a big impact, and I just want to make you all aware of it. That is going to be found up in our gear icon within our client plan. So we are within a client plan, and the way that we know that is because we have a client name that's indicated in the upper corner. So today we're talking about the Patrick and Brittany Mahomes plan. This is just a sample plan. I have no affiliation with the Chiefs quarterback. That being said, the setting that we're going to touch on is going to be found again in that gear icon in the upper corner, and then settings. We're then going to look at other assumptions. I'm just going to scroll down here at the very bottom where we can see our miscellaneous assumptions. And these are going to include things like the cost of purchasing a real estate property and the cost of selling a real estate property. So this is going to model things like closing costs or other fees associated with purchasing and selling real estate. As we're going to go through and do the different modelings today, these fees will be taken into account and offset our proceeds and different items like that. So just important, these are the RightCapital defaults of what this costs and selling percentages are going to be. However, you can customize these on an individual client-by-client basis, and you can also impact them on a global level if you want to maybe change your global assumption from 6 to 7% for all of your clients. You can do that out in the advisor portal in the assumptions tab as well. But within a client plan, this is where you can adjust it in case you wanted to manipulate those numbers. This is where you can find them. Once you do make your selection, you'll just switch the global assumptions. My sample plan is set up a little bit differently, but your client plan will allow you to click the drop down here. You'll hit customize, and then you can just type in the value and hit save at the bottom. That being said, now that we kind of understand that setting, let's dive into just a quick overview of the data entry on how to get these properties into RightCapital appropriately. In order to do that, and we're going to be focusing on entering properties that the client already has. Goals for purchasing properties and properties that they might want in the future, we'll cover a little bit later on. Within the profile tab along the top, we're going to be doing the most of this work within our net worth tab. If you're in the initial data entry of a RightCapital plan, that 6-step data entry, the net worth step is by default step 4. However, you can do it in either spot. So we're going to be within the net worth tab. And then you'll notice on the left-hand side, we have our screen here where we can indicate the different assets that the client has. Any properties entered within the plan are going to be entered under this property category. In order to enter a property into the system, you're going to click Add Account in the upper corner here. We're going to hover over property. And then within RightCapital, you have 3 different options for entering properties on top of your primary home, which I'll touch on in a second. We can enter investment properties. Those are going to be our rental properties, vacation homes, and then any land as well. Now, by default, within the system, you can have one primary residence. That's our primary home. This is going to be entered within your system by default. When you open a RightCapital out-of-the-box plan, it's going to look like rent. When you do open this up, if your clients do rent a property, you can just enter in the monthly rent figure that they're paying, as well as any annual insurance that they're paying as well. That's going to be pretty simple and straightforward for our rental clients, but if they do own, as I'm sure many of your clients do watching this webinar now, we're going to switch this to own, and then we'll be able to fill out the relevant information for the specific property. In this case, this is their primary residence again. We can indicate a specific name for the primary home if you'd like to title this whatever is most convenient for you. We can also indicate the owner of this property. It can be joint ownership. We can even put it into a trust, or if it's just owned by the individual client or co-client. We also have our purchase year here, and I will point out that this is a bit categorical, so if you don't really know the exact calendar year that the client purchased the home, assuming the home was purchased at some point in the past, we can always just leave this as already started. Then we have our purchase price, and this is important as it does impact those future-looking projections, and it will impact the capital gains taxes if you're looking to sell this property in the future. You'll then enter your current value, and then we have some areas here for additional fees like our taxes, insurance, and maintenance information. We also have figures that allow us to adjust the annual appreciation percentage and an increase on the taxes. Now, this annual appreciation, I will note, does apply to the property value as well as that annual insurance cost. So if we're going to enter an appreciation figure, you're going to see that impact on the value of the property as well as the insurance down here. Now, if your property does belong in an HOA, you can also include the HOA fee within the insurance category. You'll see in the cash flows, insurance and HOA is going to be lumped together, so you can just include any associated HOA fees here as well. Excellent. A really common question we get as well is when we're entering these expenses, why are we entering these taxes, insurance, and maintenance fees in the property card and not baked into the living expenses, right? When we're doing data entry, we do have the ability to enter in our pre-retirement living expenses, which are the anticipated monthly household costs. And the reason that we break these out separately, right? We enter them in the net worth, so we're not going to include them here. And the reason that we break them out is just so that in the future, if we do plan to sell this primary home, the system's going to recognize that these associated costs are going to stop and they're going to start up differently, probably with a new property, right? So breaking them out here just allows us to differentiate those expenses from the plan and giving us a little bit more accurate of a projection. I will also note as well that if your clients do not have a primary home, maybe they don't even rent, right? You can see here, if we hover our cursor over the vacation or the rental property, we have an X that populates that allows us to remove it. We cannot delete the primary home in RightCapital. As an alternative, maybe you have a client situation where they are a younger client that are still living at home and not covering any housing costs, or they have an interesting client situation. We can always just set this back to rent and set the associated costs to 0. This is going to be as effective as deleting the primary home from the system. Just due to the setup of RightCapital, we can't actively delete it. So this is going to be the best way to kind of work around that for anybody with a specific situation who does not own a primary home. That being said, our clients today do own a primary home, so I'm going to set this back to own, and we have the relevant information here. I also want to talk about the other property types quickly that we can enter within RightCapital. The first one being a vacation home. And just clicking into this, you'll see the information looks pretty similar, where you have the home name, the owner of the home, when it was purchased, the purchase price, the value, appreciation and tax information, as well as associated fees. But the main difference that's here is that we can specify the location of our vacation property. Within the primary home, you'll notice that we didn't have the ability to specify the location. And that's because when we're doing the data entry for the plan, the primary home is going to follow the location that's set in the family card under the main client. This residence state is going to indicate where the primary home is located. So if we needed to change where the clients are living, we're going to adjust this residence state here. Now, if we're going to model a future move at some point later on in the plan, we have another card that can model that future move, which we'll touch on a little bit later. But I'd just like to point out that the vacation home does allow you to specify that location that's different from the primary home. On top of this, we can also model a year of sale. So you can sell the vacation home, right? We can't remove the primary home from the system, but we can get rid of this vacation property if maybe our clients don't want it anymore. You can specify this occurring at the end of the plans or a specific calendar year, maybe after a number of years, so you have some control over when we want to sell this property. When we get into modeling specific scenarios a little bit later on here, I will discuss how we can move and sell the primary home eventually. And then lastly here, we have our rental properties. So if you have clients with a rental property or an investment property portfolio, this is going to be super helpful for you. The upper data entry section here is pretty much the same, right? You can even specify that location. So this rental property also exists in Florida. And then down below here, we have our rental income field. So this is going to allow us to specify the rental income that we're getting from this rental property. Now, RightCapital usually gives you two options when you're entering information like this into the system. The first one being a nice, quick, and easy option, and the second one being a little more detailed, depending on how into the weeds you want to get. If you do look at the rent approach here, we have the ability to set it as a simple growth, which is just going to allow for a monthly rent income figure, as well as applying an annual rent increase to it. If, however, we want to get a little more detailed, we can use the detailed schedule. This is going to allow us to really indicate a monthly rent income and any growth associated with that on an annual basis. We can even adjust the vacancy. You will notice here that I have the simple growth set to the monthly rent income of $3,500. And because I have that entered in the monthly rent income, when I switch it to the detailed schedule, that RightCapital is going to utilize the $3,500 that I've set and create a detailed schedule for me. We can always go through and clear everything and start from scratch if we don't want that to be the case. And then we also have some quick fill options here, like utilizing a simple growth feature or interpolate if we wanted to, gradually increase from a lower value to a higher value later on in the projection. So you have some simple growth options here, or some quick fill options here, just to cut down some of that time on the data entry. Excellent. So I'll leave it on simple growth for today's purposes, but the system's going to behave very similarly depending on which option you select. Of course, detailed schedule is going to give you a little bit more control on the exact growth that you're looking for. And then down below here, we also have our tax section. This is our tax detail section. Really common questions that we get here are our total tax basis. This is going to essentially be the total cost basis of the property excluding land. So we want to make sure we're not including any non-depreciable portion within that value there. The total tax basis is actually going to replace the purchase price in terms of the value that RightCapital will reference when the property is sold for capital gains taxes. This is just for the rental property. So I'll say that one more time. The total tax basis is going to replace the purchase price as the value that RightCapital will reference when the property is sold in terms of capital gains taxes. We also have our accumulated depreciation field and annual depreciation, right? So for anybody who's not familiar, depreciation on rental properties is a tax benefit. It's going to allow you to deduct the value of the property from your taxable income spread out over a period of time. That is a useful life in RightCapital of 27.5 years. So RightCapital does assume that residential property. A common question that our support team gets is, what do we put in this annual depreciation field? Typically, this is a simple calculation that you can do, which is essentially taking this total tax basis figure here and dividing it by 27.5 years. It's going to allow us to spread the deduction evenly over the total time frame. So for example, I've done the math ahead of time for you here. So our 600,000 divided by 27.5 is going to give us an annual depreciation of this $21,000 figure. Now, the accumulated depreciation field is just going to indicate, how many years have we accumulated depreciation on this property. So for example, if we've accumulated depreciation for the past 3 years, I've just multiplied this figure by 3. And so we've gotten our $65,000 figure to enter in our accumulated depreciation field because we've accumulated 3 years of depreciation on this property. And then lastly here, we have this passive loss carried. The passive activity rules are built into the system for you automatically, just as the 27.5 year useful life rule is built into the plan as well. This is going to be applicable in cases where clients have been potentially losing money in previous years on this rental. And this is where we can enter losses that were not able to be deducted in previous years that are carried to today. If the rental property then becomes profitable in the future, we'll see that deduction occur within the plan and it will offset that rental income that comes through in the client's Schedule 1. And I'll touch on where all this information is going to display from the tax forms in a moment here. I will also specify that RightCapital is going to account for depreciation recapture when these properties are sold. So if the sale price exceeds the adjusted tax basis at the time of the sale, the difference between those values is going to be taxed at ordinary income rates instead of the long-term capital gains rates, up to a max of 25%. A lot of this information is also available in our help center. I know this is a little bit more of a technical side of things, and we won't be as technical a little bit later on in the webinar, but I do like to just indicate all this information that is built into the system. So, RightCapital is doing a lot of the legwork for you, and all of these, detailed questions are being handled for you. Should you have any clients that are, super in the weeds about some of this information. And then the kind of last field here when it comes to investment property is just modeling that year of sale, of course. And we can always propose different years of sales within our proposed plan, which we'll touch on in some of those what if scenarios that we're going to be modeling in a moment here. Excellent. So I'll go ahead and hit save. So we have our 3 properties within the system here. I also want to just touch on entering a mortgage in RightCapital quickly as well. For anybody who's not familiar with entering a mortgage, you'll just click Add Account in the upper corner. We'll click Loan. And then here we have a couple of different options. We have the ability to enter the account name, the owner of the loan name, and the loan type. This loan type field is going to allow us to specify from a couple of different options here, a reverse mortgage, interest only, or adjustable rate. Today, we're just going to focus on this traditional mortgage, but all of the fields are going to adjust and become applicable to the type of loan you're looking to enter. Let's see here. If I scroll down a little bit, I will specify that should you be working with a prospect or somebody that you don't have a lot of the information for, we have all these different entries for the loan, but for the most basic information to generate an amortization schedule and to see the loan being paid down over time, all you need is the monthly payment and the total balance. That's all you would need if you're working with somebody, like I said, you don't have a lot of information for, and you need the bare minimum. Monthly payment and total balance is all you need, and you'll see that being paid down in the cash flows. If you are going to be working with this client a little bit more and you have a little bit more detailed information, you can enter in the original amount, the interest rate, the loan term, and the origination year, and this will calculate a minimum payment for you. So let's go through here and just enter in a amount here. Let's see, I'm just going to use some sample numbers. And when I hit save and I open up that loan again, we can see here just by filling out these fields, RightCapital has calculated a minimum payment for us. If your clients are using the minimum payment, we can leave this here and RightCapital will use the higher of the monthly and the minimum. But if your clients are paying a little bit more towards their mortgage than the minimum payment, you can enter that in the monthly payment field, and then RightCapital is going to handle that. It's going to utilize the higher of, I should say. So if your minimum payment is higher, the system's going to use the minimum payment to pay off the loan. But if your monthly payment is higher, the system's going to use the monthly payment to pay off the loan. So you can kind of override that minimum if you're not looking to utilize it as much. Let's go through here and just enter in a balance. Again, this is just a sample number. And then at the very bottom here, we have some other options that allow us to model an early payoff, something like a balloon loan, right, to really just pay off this mortgage. And then we also can link it to a specific property. So we have multiple properties within the system here. You have the ability to link the specific loan to the specific property, which is going to be super helpful here. Now, if you have a property with an outstanding mortgage that you are modeling a sale for, RightCapital will pay off the balance of the mortgage and offset the sale properties to account for this loan. So RightCapital is going to handle all of this for you if you do have an outstanding balance on your mortgage, all right? Excellent, excellent. Let's see here. Let me make sure I'm not missing any relevant information when it comes in to the mortgage data entry. Excellent, excellent. All righty. Let's also touch on the tax implications here, right? We have a lot of those sample tax forms over in our tax tab, and I just want to show you where the specific information is going to flow through as we're doing our what if scenario. So really quickly, let's pop over there and then we'll start modeling some fun stuff. I'm going to navigate to the tax tab in the upper corner here. And then within the tax estimate details tab, this is where we're going to find our projection for our tax forms. These are going to be projected out for every single year of the plan, and they are a lot of times using our return assumptions in the system, but this can also give us some really valuable information on the items that are flowing in from that net worth tab that we just entered. When it comes to rental properties and that rental income, for example, I mentioned we're going to see that on the Schedule 1. So within the drop down in the upper corner here, we do have the ability to look at the Schedule 1. And then on line 5 here, we are going to see the income displaying from our rental property. And then we also will have on the Schedule D, the capital gains from the sale of the property. And that is going to be on lines 11, I believe. Yep, so capital gains. And then through to line 15, we'll see that being displayed as well when we are modeling the sale of the property. And then when it comes to depreciation recapture, we're actually going to be able to see that on line 19, uncaptured section 1250. So if we do have any depreciation recapture that's being handled within the system, we will see that flow through here as well. So I know that was pretty technical here, but I do just wanted to showcase where you can find this information within the mock tax forms so you can navigate these with a little more confidence from a real estate perspective. So again, Schedule 1 is going to show us that rental income, and then capital gains information and depreciation recapture are going to be displayed on that Schedule D. Again, all of this information is also available for you on our help center, and our support team is more than happy to answer any questions you might have as well after this webinar is concluded. That being said, let's also take a look at where some information is going to display within the cash flows. This is just going to help us navigate the system even better so we can fully understand the implications of the things we have entered within the system. Taking a look at the cash flows, we're going to navigate to retirement and then cash flows. I'm going to click on my cash flow summary here. If I want to see the income from my rental property, I'm going to navigate to my other inflows column. If you're not familiar with the cash flows, any column header that's underlined, you can click into it to get some additional information on what that number is. If I click on rental income, we can see rental property being displayed here. And this is projecting every year of the plan that we have this rental property and the rental income that will be generated from it based on the information entered in the profile net worth. We can click on this breadcrumbs to get back to the summary. And if I want to see housing expenses, I can always click on the expenses tab and click on the housing category. And we can see here, let me scroll up to where my mortgage amortization is. And we can see for the primary home, the expenses that are associated with it. If we want to see expenses associated and values associated with the other properties within the system, we can click on the net worth tab. The net worth tab is going to display the value of our primary and vacation homes. And we'll see the value growth over time if we've indicated an appreciation to it. We can also see our investment property and the growth on that rental. We also have our mortgages category here as well. So if we have multiple mortgages entered within the system for each of these properties, we can see that pay down schedule existing throughout the length of the plan, and we can see the values going down over time here. Excellent, excellent. All right, so that's within our cash flows again, just to show you where this information is going to be displaying so we can really understand what's going on within the system. That all being said, let's get to the fun part now and actually model some of these what if scenarios, which I know that's what we're all looking for. So we're going to be doing a lot of this in the retirement analysis tab. The retirement analysis is kind of the bread and butter of RightCapital. It's where we are going to model a lot of those what if scenarios using the action items down below. So we have our probability of success for our proposed and our current plan here. Our current plan is pulling all the information from our profile tab. And then by default, the proposed plan starts off identical to the current plan. And then with the action items down below, we can make suggestions to see if we can bolster that probability of success. If I scroll down a little bit here, we have our existing asset sale section within the action items. What this is modeling here is it's showing that we have the two different properties within the system. And remember, we cannot just directly sell that primary home. So we're not seeing the primary home here, but we are seeing the rental property and the Florida condo, right? That's our vacation home. If we did want to, maybe, for example, see what it looks like if we sold one of these properties a little bit earlier than holding them to the end of both plans, we can click on the drop down here and model a specific time to sell these properties. So for example, if I want to sell the rental property, maybe we're tired of being landlords and the clients don't want to deal with it anymore, we can model a sale in a specific calendar year. We can always adjust when that calendar year is. Maybe we're going to hold on to it for another couple of years and then decide to make that sale. So we'll go ahead and hit refresh here. And then we could scroll up and we can see exactly what happens when we sell this rental property. Right, so in this case, we're seeing the probability of success go down. This could be for the reason that we're not getting that income anymore. So we're not having any income bolstering our expenses. And so we're losing out on that specific scenario. So we're seeing this probability of success go down in this case. We can also model something like keeping the rental property and maybe selling the condo. So the end of both plans will allow us to keep that rental property. So we're not going to sell it. It'll be dealt with, after the clients pass away, but they've kept it for the length of their timeline. And maybe we can look at what happens if we sell the Florida condo instead. I hit refresh, we'll scroll up to the top here, and we can see in this case, selling the Florida condo yields a much better result than selling the rental property. So this is just really a simple scenario showcasing what's going to happen between modeling one scenario versus another, right? A lot of times the clients are going to have a lot of different scenarios that they want to model. So we aren't stuck to just manipulating these down here. And we're also not stuck to just one proposed plan. For example, we can always create additional proposed plans by clicking this Add or Remove Plans button in the upper corner here. This is going to allow us to create additional proposed plans so we can have multiple proposals within one client plan instead of just relying on that proposed plan. We can always create a copy of the proposed plan. So if we do have action items that we've changed that we want to keep and continue to build off of, we can create a copy of that proposed plan. Or if we want to start from scratch, we can click Add a New Plan, and that's going to generate a completely new plan that is a copy of the current plan. Excellent. A really common scenario that we see is the clients moving from one location to another. I mentioned that we cannot just sell our primary home without another primary home. So this is going to be a way for us to, sell our primary home and move the clients to a new primary location. We can title this proposed plan whatever we'd like to help us keep track of things. In this case, let's see that, they're rental properties in Florida, their vacation homes in Florida. So these snowbirds want to head to Florida. It's really cold up here in Connecticut. If anybody is, up north or even towards the middle of the country, I know we're anticipating a pretty big snowstorm coming up. So we're trying to avoid that in the future years with these clients. They're no longer ready to handle the cold. So let's go ahead and model these clients moving down to Florida so they can be a little bit closer to the other properties that they manage. I'm going to showcase here that we have a drop down now on the left-hand side. We do have a drop down on the right-hand side, but the plan that we're going to manipulate has to be selected on the left. So I'm going to have this set to the Move to Florida plan, and we'll see here it's going to reset my action items so they match my current plan. I'm going to scroll down to the bottom now, and this is where we can get a little more flexible on the sale here. And I am not sure why my Florida condo is modeling a sale in 3006. But of course, we'll just set that back to the end of the both plans, and we shouldn't see any impact on the plan here at all because this client plan is not going to be extended out to 3006. But wouldn't it be nice to live that long? That being said, let's go ahead and model what we call a primary home relocation. I'm going to click Edit in the upper corner here, or the bottom corner, I should say. And then we will click on this Add New Items button because this is a brand new goal. We have to add a new item for it. I'm going to find my specific goals, and we can see within this drop down here, we have a lot of different options. We can model a bunch of different things, but if we want to model a primary home relocation, that's going to be found under the goals category. And then I'm going to hover my cursor over the property category, and we're going to find what's called that primary home relocation. This primary home relocation, again, is going to help us model moving from our primary home into a new primary home. So we're going to call this New Florida Primary Home, and you can title this whatever is easiest for you to keep track of. We are going to model, let's see, a purchase price of $400,000, and these are sample numbers. Within the new home field of the primary home relocation, you have some options as well. We have buy a new home. We could also model inheriting a home, renting a home. So if we want to move from ownership to rental, and we can even move into an existing home. And we'll explore that a little bit later, but if we do want it to move into an existing home, we can move into the vacation home that we have. Or we can even move into the rental property. It would no longer be a rental property. That rent income would stop and the clients would assume that as the primary home. So we have some options here depending on if we wanted to maybe not purchase another property and just utilize the two that we have, we can move into those. But for this scenario, these clients do want to purchase a new home. So we're going to buy a new home. We're going to change the location, right? So remember, we have it set to Connecticut in the residence state in the family card. Now this is going to be relocating the client plan. So this is going to be readjusting the state tax calculation that's applied to RightCapital as well. We can indicate when this is going to happen. It doesn't have to happen immediately. Maybe it can happen at the client's retirement, or we can indicate a specific calendar year, right? We've been messing around with the year 2030. So let's see what happens when these clients decide to move in 2030. They unfortunately have to put up with about 4 more years of the cold up here in Connecticut. We can enter in the property tax information. Again, excuse me, just throwing in some sample numbers here. The nice thing about the primary home relocation card is that it also will handle any mortgage that's going to be tied to the new property. So if we're going to finance this purchase, we have areas down below that allow us to indicate a down payment. And in this case, we'll just do a conventional loan. I'm going to enter some sample numbers here, but this is going to generate not only paying off the existing mortgage, selling the primary home, offsetting the proceeds. It's also going to handle purchasing the new home and setting up the new mortgage for the new property. So this is a lot of functionality in one card here. We can indicate an early payoff to the loan if we're looking to do that. And then down below, we have what's happening to the current home. So the current primary home in Connecticut, are we going to sell it immediately? And that doesn't mean sell like right now. It means when this goal occurs in 2030, we are immediately going to sell the primary home, right? So in 2030, we're buying the new one and we're selling the old one. We have some other flexibility here as well. We can convert the Connecticut home to a vacation home, and we can even model when we want to sell that. So if we want to hang on to it for a little bit, maybe we're feeling sentimental, we don't want to let go of the home, we can absolutely have that option for the clients as well. Or we can convert it to a rental property. If the clients decide to convert it to a rental property, we have some fields available here that will also account for the rent income that the old property is going to generate. This is going to allow us to enter the monthly rent, apply an increase to it, a vacancy rate, even taking care of that depreciation and annual additional expenses here as well, on top of selling that home eventually at some point, should we want to model a sale on it. So we have a lot of functionality, again, within this primary home relocation card. In this case, for simplicity's sake, I'm going to leave it to sell immediately. I'm going to hit save. In this case, if we scroll up to the top, we can see what this impact has on our current plan if we were to move to Florida. Now, let's say we want to, in the proposed plan, the original proposed plan, we did model selling that Florida condo. So if we wanted to maybe continue with that plan of selling the Florida condo, but also primary moving to Florida, we can also utilize the action item within the existing asset sale and set to sell this. So we have a sale. We have two sales occurring in the same year, which could be crazy for those capital gains taxes. Not a recommendation for these clients, of course. However, just to showcase to you that we can model two sales happening in the same year, as well as a purchase. And we can see with this strategy, we have a much more robust plan by the end of the planning horizon here. Excellent. Alrighty. We also have the ability to model some specific scenarios here. For example, if we wanted to model a really common question is if we can model a 1031 exchange within the system. So let's go through here and model that scenario. I'm going to create a new plan, and we're going to purchase, let's see, a new rental property plan. We can, 1031. In parentheses here, so we don't forget what it is. I am always an advocate for titling your plans as specific as possible. We'll go ahead and create or select this one in the drop down here. And again, that's going to reset my action items. I'm going to scroll to the bottom now. I'm going to reset. For whatever reason, my plan is being a little bit silly today. We're not going to do anything in 3006. And then I'm going to model that 1031 exchange, right? So we have that rental property down in Florida. It is something that maybe is not suiting us anymore. We want to 1031 exchange it and defer those capital gains taxes. I'm going to click edit in the bottom corner here. I'm going to click add new items, and we're going to find goals again. This is still a property goal. We're going to go to property. And then instead of a primary home relocation, I'm going to select investment property. With the investment property, this is going to allow us to adjust to enter the new purchase price information. So we're going to, this is a higher valued property, so we're going to have to increase the purchase price here. the acquisition type. We can inherit, purchase, or even convert an existing property. So if we wanted to convert maybe that vacation home, that if we're deciding not to sell it, we can convert it to a rental property. But in this case, we're just going to purchase a new property. We can indicate the owner and where this is occurring. We'll go ahead and keep it in Florida for now. We're going to do all our business in Florida. We can indicate if this is going to be a joint endeavor as well. When is this going to occur? So we can maybe push this out a little bit further. Maybe we have a little more of a timeline. This is a more expensive purchase here, so we want to make sure we have the funds to do so. I'll go ahead and just enter in some numbers here for our tax, insurance, and maintenance information. And then down below within the investment property goal here, we are taking into account what we're going to be getting from monthly rent. So we're going to increase that rent a little bit to more expensive property. We are going to indicate if there's an increase on the rent, a vacancy rate, which is just, if there's a percentage of the time that the home will be empty, we're going to deduct that percentage from the annual rent that is generated so we can account for that vacancy. We also have annual depreciation. We talked about that earlier. And then the down payment information if we're going to be financing this purchase. So in this case, we can do something like a 50% down payment, maybe a 15-year, and we'll throw in a interest rate if we want to model an early payoff. When this is going to be sold, if we want to model this being sold later on in the plan. And then here is where we can model that 1031 exchange. So if we wanted to again, utilize the existing rental property and exchange it off here, we can go ahead and select the rental property as the option here for our 1031 exchange. I'll go ahead and hit save. Very simple process for that 1031 exchange. And we can see this is now occurring in 2035. And we can see what this does for our plan here. So that's an expensive property price. We're already at a 64% probability of success. So in this case, we are not seeing a great outcome for this specific plan. And that could be for a lot of reasons. Maybe the down payment is really hitting the investment accounts. We can take a look at maybe doing a little bit less of a down payment, a longer term, maybe lowering those mortgage payments a little bit. Maybe we can qualify for a lower rate depending on how lucky these clients are. Well, not lucky, but how their credit is evaluated and all those things. So we can make those adjustments too and just kind of see. So here, by making those changes, we're getting a little bit better, but it's still not a super great outcome. So just by looking at these different scenarios, we can kind of see, what's beneficial or what is an option for this specific client situation as well. If we wanted to see things maybe on a side-by-side basis, we could also select, having one plan on the right-hand side and one plan on the left-hand side, and we could showcase to the clients, hey, this is what your probability of success is going to look like on this side, and this is what it's going to look like if you go this route. So it's really going to be compelling to show these clients in real time as you're making these changes. This is how your plan is going to be impacted by the different options you're interested in. And it really can help them visualize and just make a better decision for their financial future. Excellent. So we've modeled a couple of different scenarios here so far. There's another scenario that is really commonly questioned that our support team fields on a daily basis, I would say, and that's how to model a refinance. So really quickly, if we're going to model a refinance, I'll just do this in the proposed plan here. If I'm going to scroll down again, and a refinance is a slightly different process. Instead of edit, add new items, and goals, we're actually going to model a refinance in the income tab. We'll select income, we'll hover over other, and then we're going to click on new loan. Within the new loan field, we have the ability to enter a new loan amount, the owner, of course, the loan type, when this new loan is going to come into the system. And then we have a dedicated refinance field here. This is essentially like a cash out refi. We can model a refinance. We can select which mortgage. This is why it's important to title your account so you can tell which mortgage is which. You can indicate, which account we want to refinance here. Indicate the new loan term, the new interest rate. Hopefully it's lower. Maybe we'll see. I know rates are not this low right now, but hopefully in the future we can get there. We can enter that new loan amount. I'm just entering some sample numbers in here. And then we can link this to a specific property. We even have the new primary homes in here if we are, or the new rental property, if we are utilizing one of those as the refinance now, right? So these what if scenarios are being applied to the plan and we can utilize them as necessary. So we'll go ahead and just refinance one of these properties here and hit save. And this is going to happen immediately. And we can see how this is going to impact our proposed plan, of course, as well. Excellent. Alrighty, so we've covered quite a few different scenarios here in terms of refinancing, a 1031 exchange, moving to Florida, downsizing a little bit. So we can really showcase how these impacts are occurring in our plan here. If we want to, in this case, we have three different scenarios. We can only do a side-by-side for two scenarios within a RightCapital retirement analysis screen. If you wanted to have maybe 4 or 5 different scenarios and showcase this to a client, you can always do a report generation. And that's going to allow you to have, 3 or 4 or 5 different retirement scenarios all on one page. So we can really showcase this in one page to a client. If you're going to generate this into a report, we'll click on the gear icon in the upper corner and we'll select report. If you are looking to include other modules in the report, go ahead and select which modules that you would like to include. However, for today's purposes, I'm going to click on retirement analysis because this is where we did a lot of our modeling. I'm going to go ahead and select the areas that I want to include, right? So we have a series of visuals in the retirement analysis tab, but specifically we were looking at that probability of success, right? And the probability of success is not the main indicator of a plan's success. However, it is a good metric to, showcase to clients the strength of a plan. So if you wanted to include that, you would select probability. And down below, we have this select plans toggle that's going to allow us to include the different plans that we have created so we can include them all into a report. I'll go ahead and click done here. You can always include other items into a report, but just for today's purposes, I'll show you what it looks like when we have the 4 different plans side by side. And that's the current, the original proposed, that 1031 exchange, and downsizing and moving to Florida. We can see here we have the 4 plans side by side. So it's just a quick way to show the clients, hey, these are the 4 options that we discussed. This is how it's going to affect the strength of your plan. You can have a series of other pages down below that highlight and indicate the strength and other items, maybe the cash flow report if you want to include that as well. But it's going to be all available here for your client too if you wanted to have that as a deliverable for them.